Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, two things, and just wrapping up with this, and I want to you guys to ask some questions, and I want to leave some time together, and I thank you for your patience of me getting knocked off on my phone and the things like that. So I definitely appreciate that. You guys bearing with that and going through that with me. But I do want to. One is for you guys to text in some questions and give me some feedback of some things that maybe I could go back on a slide and go over it again a little bit, or you have a direct question for me. As I've had experience going from 93 into today and being a self-funded trader ever since 1997, and along the way, I found education to be not only helpful for me, but because it cements the ideas in my mind, but it gives me a way to give back to the markets too. And now with the computer, I could trade and teach live. So it becomes something that I'm definitely interested in, love. There is our information as well. I give out text alerts every day, Monday through Friday on the markets, and I was texting people about my interest in short the New Zealand, short the Aussie, long the Canadian, U.S. dollar against the Canadian, not the futures, the spot. I know some of those are backwards, and I was interested in selling the U.S. dollar Swiss, but it didn't get as high. Mike asked, how do you determine, let me see, I know them, but not always check them. Okay, I am seeing more confidence in the bias build. Okay, Mike says, how do you determine, I'm going to scan through all these, how do you determine your red and green lines? Great question, Mike. The red line, and going back to that chart, let me go up. Back to that area. The red line is the previous close. So it's basically where the market closes at 2 p.m. Pacific, 5 p.m. Eastern, and reopens. So it's basically where all your positions are normally marked to. If you have an open position, as where technical indicators, like on daily charts, where they're based from, but it's the previous close. And then from 1400 to 1400 the next day, completes the 24-hour cycle, and then I'll move my red line up or down according to where that price is. The green line is just where you see on this chart that I have up, the high and the low, it's just the high plus low divided by 2. So it just gives me a sense, and it gives me two directional sense indicators for my day. And like I said, if you look at weekly time horizons or monthly time horizons or wherever you're at from there, use those. Use those things to gauge who's winning and who's losing, because that's the people that you're competing and working with off of that. So that's just something that's universal. I track the day, I track the weekly halfways, I track the yearly halfways. Because price is telling me what the news is telling me. So the point is I don't always have to listen to the, I enjoy listening to the Maria Bartichiromos and the Rick Santellis on CNBC. But what I found in this game, in this world, is it's hindsight. Price is already telling me that information, and us with the ability to have real-time charts in our homes now and have our pulse and our finger on the action, we have more real-time information than they do, because they have to go through all their monitoring of the information, make sure it's accurate, right? You see it. You have real-time information, and this is what's going on. You see, and you have that, previous close or that halfway back. That's how I do it to give my sense of direction. It's nothing fancy. It's not rocket science, but it has given me consistent results since I've been on my own, 1997 today, where I can make money consistently doing this. Do I make money in every trade? Absolutely not. Do you guys want to see some of my results? I'll share my screen with you and I'll do it. Do you guys want to see some of the trades I'm putting on? I talk and text about it real time and talk you through the good ones and the bad ones and talk to you through exactly what I do. And if you want to follow along, you're welcome to follow along. I give a week trial to that information for free. I put out environments that you could check it out and feel it out. And if I'm a fit for you, then you'll come and call me. But I challenge you guys to find a fit for you, because you can't sit and do this alone. You need somebody, you need a confidant, you need a mentor, you need people like Steve, who's promoting these webinars and building this educational environment for you. You need these types of environments to ask your questions and get them answered. And if you want to shortcut it and you want some one-on-one help, well, you pay for that. But you want to ask questions of your mentor as well too. Are they seeing what you're asking? Are they answering the questions what they're asking? So Bud asked the follow-up from there, does the green line move as the high and low divided by 2 change? Absolutely. So as the market in this euro, and as this result came in, because now the green line where you see that the high is up towards 137.20 at between like about 11 o'clock a.m. Pacific. So you would take that new high plus low divided by 2, and where the green line would be from this new perspective that I showed you after I showed you the results, where I went from this point, because this chart isn't real time, it's a snapshot of things, where this is where the green line was when the execution of the trade hit. Well, now if you're in or you're out or whatever you do within the moment of while you're in the trade, well, the continual result was when did the market pull back? It hit a high up towards near 137.20. So the low is 135.52, and knowing that that's one yellow line, 2, 3, 4, 5, almost 6. 3 levels back would put that halfway back now around 136.36, just looking at this chart. So every time a new high is made, that green line is going to move up a bit, and every time a new low is made, that green line is going to move down a bit. So it's just giving you a sense of balance of power. Like I said, the analogy I use, it's like a football field to me, and that's where the light bulb went off. How do you determine your targets, Mike? Just like everybody else. They use I use past frequent highs or lows, standout highs, standout lows. We'll look at retracement zones. You look at average true range. You can do all those different types of things to get you a feel in terms of your time horizon. But that is something that we teach. I show people exactly how I do that. And that's for a point. If you want some more follow-up on that type of thing, we could talk and discuss through some of that stuff. We've created an ebook. We've created basically to give you an environment to look for. We have interactive quizzes. We have real-time help during live market hours, talk to you about what I do. And then we have monthly classes, or I even have one-on-one classes that I do with people as well, depending upon what you're looking for and an idea. And then, and we just, we're about near the end of the year, we'll have a book coming out. We just got a deal with Wiley, so we're going to be writing a book on our strategy as well. But we do have it in a web form and a PDF form, but now we're putting it in book form. So,
hey, Mike.
But from there, you establish how far you think the market can move. How far it might go up in a day, how far it might go down in a day, and adjust your contract size along from that. So, anybody else have any further questions? Let me scan through some of the others.
Hey, Mike, I have a question for you, Steve.
Sure.
What would be the first step for an attendee if they're interested in your services? I mean, what's the first thing that they can do? Is it going to your website? Is it receiving those text messages? What would you recommend?
Yeah, well, again, it's because I know what type of world we're in, and there's a ton of free information, and you have to weed through this, weed through that. So what I do is I give people, you go to the website. There's rdstrader.com. My wife and I are running the DTI FX division. They weren't running up. They didn't have FX on their books. And we were doing it, so they invited us to build their FX division. So if you go to either one of those websites, at the top of the website, you'll see a free trial. And you'll see a point of, for 1 week, you'll get access to our levels, you'll get access to our text alerts, you'll get access to our archives of information, and you could see the methodology in action. So again, it's for somebody that, we're going to get maybe 1, maybe 4 opportunities a day. That may be too much for some people. That might not be enough for some of you. So the point is I wait for these areas, but at least you'll see, snapshots of my charts, just like what I'm showing you real time, and then you could adjust the lines and stuff on your chart as you see fit. We use Yahoo IM to deliver the information. So there's that way to come in. Another is, email Q&A, or there's a phone call and say, hey, Mike, I want to do some one-on-one with you. So we'll have a conversation where I don't take everybody that wants to come one-on-one with me, and not everybody wants my one-on-one type of environment. So we have a conversation to see if it's a fit, and we go forward. And then we have ideas where I kind of have where, you know, you pay a fee and it's divided out in 4 monthly payments. And at the end of the month, if you don't like it, you don't have to continue on. So, you know, from that point, so there's various ways that you'll find at the website to get involved if you're interested. You know, like I said, I found an environment on the screen that I could trade live and communicate my information without it disrupting the client flow and without it disrupting my trading flow. I couldn't do this on the trading floor. That's why I'm excited about the screen. Do I want the pit to be back? Absolutely. It was so much fun being on that floor, the energy on that floor, all of that stuff. But now I have an environment to be able to trade and teach. So yeah, you go to the website if you want. You could opt in. There's a Yahoo IM thing that you could click on, and you could send me a message. Say, yeah, I want a free trial, and I came from ISE, you know, or Steve sent me or something, and then so I have an idea of where you came from, give you a trial, and see if you like it, see if I help. If I don't in that trial, it didn't cost you a dime. But if you want to go further and you want to shortcut your information, you like what we're doing, you can move forward from there. But thanks for that question, and thank you guys for that. And are there any more questions, Steve, or did you see any more down there that I might not have answered?
Let me take. Tom has one, and I think this is a question I've gotten often, is that, you know, many people say, oh, how can you trade currencies because they're manipulated? You know, how can an average Joe like this gentleman, Tom, ever expect to make money when it's manipulated? I'll start with that one, and then, Mike, maybe you chime in. You got to remember that markets are supposed to be perfectly, there's supposed to be perfect information for everybody in every market, and there pretty much is. However, I think, and Michael probably leads this point, is that when you look at your charts, when you have your own methodology, it helps you have potentially an edge over other people because you're developing your own skill set, you're developing your own style, and that way you can take the market information, however it gets into the market, and use it for your best purposes. So that's what I would say, Tom, is that there's a lot of things. I was on the trading floor for 20-something years, saw all kinds of crazy situations, and you know what? It's the same thing that Mike just said in the last hour, is that you have to learn to deal with whatever the market gives you, whether it's a terrible event, 9/11, credit crisis, stock market crashes, and you need to survive. So you have to decide how much can you lose, how you might figure out certain information, and maybe buy puts, sell calls, sell futures, you know, buy ETFs, buy spread, buy volatility, so many different ways. And there are people like Mike out there to help you. But that's the way I would look at it, that there's lots of information out there. You can't just lean on one person saying that this is manipulated, because you know what? Markets have different ways to lend the information or have the information permeate the actual market. So go from there and find people like Mike. Would you mind commenting on that, Mike?
Oh yeah, absolutely. Because you know, through all the years I've been involved in it, you're going to see everything. And one thing is, I got to actually see people face to face on the trading floor, and there were some of the biggest scumbags, and there were some of the most nicest people in the world throughout it. And it's just like when you walk out into the world of the street, you're going to see the whole gamut of everything. And that's one thing I really loved about the marketplace, because you saw it all. You saw people trying to manipulate things. It happens on the screen. It happens with these prop shops, and it happens with the high-frequency traders. And you read it, how interactive brokers who has to make markets across the board, and they're basically a firm that is regulated by the U.S., but then the high-frequency traders don't have to make markets. They come in and out, and they can manipulate things and move things around. And, hey, listen, when I first got into the Forex world, I come from the bond side and the future side of the market, and I love the futures markets. But one thing that we couldn't do is people come into these professional markets and have to risk professional dollars right out of the gate. But FX allows you to go at 10 cents a pip. So initially, as an educator, that gave the risk appetite for all people, and it gave them a chance to learn. Demo accounts won't teach you. So, but I was involved when I first got involved, and again, I'm not here to offend or whatever or do anything, but I had money with Radkay, My futures accounts were safe, but my FX accounts, I lost it. 75% of that went to the lawyers, and I only got maybe 25% of it when they went bankrupt. And they're because the FX end wasn't regulated. And it was rigged to that point, those things and some of the things they've done, and they did that. But I had to survive that. I didn't have all my eggs in one basket. I knew that what can happen here, and you know that. And so you try to think you have it in the right place and the right things. But now I've learned things. I've learned to be in segregated accounts. I've learned to where they're regulated with the NFA, or if you go overseas, to at least be regulated with the UK. And now Australia's coming on board with their things, and there's places that give you more leverage and less leverage and all this stuff. But the point I'm really trying to make is that that's all out there. I think it was Tom who asked the question. So it's, you'll read prop shops and you realize it's saying, well, in the small print, you'll see somebody from the CME, they paid a fine to some investors because they were on the other side of some of these trades. Right? I'm like, I'm sure they have their own prop shops. All these FX firms might have their own little prop shops of things. I want direct access to the computer, and I know I can't play what I consider in the paint and try to make a tick in the market and play in and out, back and forth, because the high-frequency manipulating people are going to win that game. I was able to win that game on the trading floor because I was able to buy it on the bid and sell it on the offer. I paid for that edge. I paid my $5,000 a month. I paid my $50,000, $100,000 for seats, and to give myself the rates and give myself the ability to play the game. So I put my money up there to get that edge because that was the game in town. But now as a retail individual person trying to play in the face of the market, making money on every single tick in and out, you're going to lose that game. I tried it because that was the habit I needed to break when I got off the floor. Because I was over trading, and I had to change my whole mentality on things to wait for my moments. And not only now to not just trade one market, because when I got off the floor, bonds were only moving 4 ticks a day. I had to give up an edge to get in, edge to get out, and I was giving up almost half the potential of the day. I can't make money that way. So the point is I look to markets that were moving and then to markets that were set up. So, I have a game plan set for 25 markets, 17 futures, 8 FX markets. And the point is not to trade them all, but weed out the ones that are giving you iffy ideas and hang on to the ones that are giving you strong ideas and waiting for the pullbacks to your areas and go. And so that is a way where I found a way to compete to your question. And hopefully that directly answered your question, Tom. But that element is out there wherever you go. And it's just that it's more rapidly seen because prices, this is instant money, instant taking away of money or instant grabbing of money from you. So keep working with that thought and knowing that, hey, that's the game that's out there, and you just need to be able to, like Steve said, survive some of these moments. And I've survived and learned through, I learned in '87 in college, I was learning through the crash. So I was thankful that when I was learning about the markets and really wanting to get involved in them, I was learning in the worst times of the economy because it taught me to play defense. And so I know where I'm getting out before I get in, and I know where I'm done on an idea beforehand. And then I was able to weather and adapt to 2001 and the 9/11, and I was able to weather and adapt to the housing collapse and credit crunch. I was able to shift from a floor trading machine to a computer sitting behind a quiet, in a quiet office in a computer. So, but it's just the game's changed, and knowing that all aspects and all spectrums are out there. And just, I just wait for my moments and know that when price moves, it's real. And, that someone's actually betting some money. And so work your way the best you can through it. But I love that question, though, because I've gone through that with the Refco crisis. And, I've been in that moment where you get in a manipulated situation and, do you have enough money to come back and survive, and do you want to or move on? Steve, any more thoughts, questions, or anybody else have any?
I just want to give you a brief moment to close it up, Mike. I want to thank you again. Sorry for the technological problems. Hopefully you'll come back in a couple months with another FX presentation, and we'll have a clean session. But thanks again, and I just want to give you a moment for any closing comments. And also I just want to go back to your slides so you can talk about your services. Thanks again, Mike. Appreciate it on behalf of the ISE.
Thank you, Steve. Thank you, everybody, for coming to. Hopefully, I've given you some insight into what I do, and hopefully you can take some of what I've said today and maybe implement it in your own trading style. and you could get involved. And if Steve, I believe, might have these charts, this stuff available for download if that's what somebody asked. But if not, if you guys want to send me an email and you'd like a PDF of this presentation, I'd be glad to send that back over to you. And again, thanks again. Sorry again for, I mean, it was my phone and wherever, but we're hooked up now, and I would love to come back and present, and I would love to offer some ideas and then answer some questions and just talk about the markets, because in the end of any of our presentations that I talk about is, and how I end them all, is to trade strong, trade smart, but always have enough money to come back and trade tomorrow. That becomes the point. So thank you again. You can take a look at and get involved in our services if that interests you. So thanks again, Steve, and look forward to coming back.
Thanks, Mike. Really appreciate it. That was Mike Radkay, and Mike did a great job. And I just want to show the slide one more time. You can go to rdstrader.com. You can send him an email at mradkay@rdstrader.com and contact him about his services. Thanks a lot, Mike. Really appreciate it.
Thank you, Steve. Thanks, everybody.
Take care now. Future ISE webinars, well, we have another in just 10 minutes where we're going to be talking about the ETFs. You'll have to log out and log back in. And next week's FX presentation will be Tony Hansen. Tony's been very, very popular here at the ISE, and she'll be talking about trading currencies using momentum, support, resistance, using the ISE FX option. So please join us next week, 3 o'clock. And Mike Tuso will be with us in just 10 minutes at the ETF presentation, considering diversification using ETFs and ETF options. On behalf of the ISE, Steve Meisinger, your host, wish you a safe and happy trading day tomorrow. Take care, everybody. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.